Dalal Street maintains its positive momentum. The Nifty reclaims 24,700. HDFC Bank and Reliance bat for the bulls. Broader markets outperform the blue chips. The Nifty IT hits a record high.
Shipbuilding stocks are the top laggards today. Sector sees massive sell-off. Mazagon Dock was the top loser with a 9% cut. Garden Reach Shipbuilders and Cochin Shipyard were also down between 4 to 5%.
Life insurance stocks like HDFC Life, ICICI Pru Life and Max Life rally between 3 and 4% as the market finds a combination of growth and valuation comfort in the space. Capital market plays like Angel One, Motilal Oswal, IIFL Securities also stage smart gains.
Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need to know as you gear up for the next trading session. I'm Prashant, with me, my colleague Sudip Bandyopadhyay. Sudip, hi.
Hi, Prashant. Well, a good day, a green day, not a close at the highs, but then I think plenty of stock buying action and the momentum is back.
Yeah, no, momentum is back. I think one could have said that perhaps things could have been a little better, but I think we'll live with what we got. So towards the end, and I'll just sort of quickly summarize the day's action. Towards the end of the day, starting at about 3:20 or so, the market sold off a little bit more. So it was looking like we were cruising above the 24,700 level on the Nifty. 24,735 or so was the high. And then, of course, the close was a little under that. I think the adjusted close will come up on your screen. And we left off just under the 24,700 levels. The important thing, of course, for the market is going to be to stay above this upper end of the gap area, which is 24,686, which it has managed to do so as of today's close. Just a few other things before we sort of go any further. You had the Nifty Bank, which has also now managed to creep above, and I'm using the word creep because it's not a decisive close above the 20-day moving average, but it is a close above it nevertheless. So 57.61 is the 20-day. And we've left off at about 50,800 levels. More repair needed, more work needed for Bank Nifty to have a line of sight to its previous all-time highs. The Nifty, I mean, I think one can start to make the case that maybe that comes into view. IT and Pharma are the two indices, the other two indices which did very well, up between 0.6 and 0.8%. Broader markets, I mean, they did well yesterday when the Nifty fizzled out. They did well today as well. Mid-cap and small-cap indices, and of course, the broader market as vibrant as ever. Survi.
Absolutely. I mean, by the end of it, it was really the outperformance coming in from the mid-cap index that stood out. In terms of themes, really financials was the hottest space today, whether it's large caps or mid-caps, whichever way you look at it. That was one solid part of the market. And that showed up a lot in the mid-cap universe as well, in the mid-cap arena. So yes, the Nifty Bank was one of the lead gainers, but if you look at it, I mean, there were big movers, and we'll talk more about this as we go forward. Life insurance companies, capital market plays, some of the NBFCs, that's where the buying action really was centered. So names like Poonawalla Finance, RBL Bank and all, that's basically a very, very vibrant and lively part of the market, financials as a whole. In fact, by the end of it, even the PSU banks decided to join the party because the party was looking so ferocious and fierce that even the PSU bank names turned around. Just want to mention sugar as well, because by the end of the day's action, there was some buying that was quite visible in sugar stocks. So perhaps there's some sense of policy action, maybe something on ethanol pricing that the market is sensing, because there is a fair amount of momentum over there. Largely speaking, mid-caps look good. The advance decline ratio was still positive, and the breadth ended on a pretty upbeat note. Well, we have a lot of ground to cover on the show, so let's tell you what today's lineup is looking like. We'll start off first with all the movers and shakers. Hormaz will give us more stock-specific inputs on the action of the day. Then, of course, we are looking at a lot of sectors in focus. We are looking at the oil and gas space, in specific the oil marketing companies. Also, shipbuilders are in focus. A lot of profit taking in some of those stocks today. Wire and cable companies were also in focus on the back of some interesting research notes. So we'll tell you more about all of these buzzing segments in just a bit. And finally, we'll cap it off with all the key events to watch out tomorrow. So let's kickstart the action with the movers and shakers of the day. Hormaz, the color was green once again.
Green indeed, and certain pockets of the market, of course, were in the red, but predominantly green, and that's what the bulls love to see. But one particular sector that was greener than the green was insurance, and that sprung up today with SBI Life, HDFC Life, all of them, the Nifty constituents, seeing some healthy gains in today's session, 5.5% higher for SBI Life, and most of the other constituents also seeing gains of anywhere between 2.5 to 3.5%. Defense as a space, as I mentioned, was not having a good day in today's session. Shipbuilders in particular, Mazagon Dock ending 9% lower, Garden Reach 8% lower. They've almost corrected 30-40% now from their highs. HAL and Bharat Dynamics also seeing some bit of profit booking in today's session. A sector that did well though were the power companies, and Torrent Power was leading the charge there in today's session, 7.5% higher there. REC PFC had a good day. GMR Power was locked in a 5% circuit. Tata Power also ending at the highest point of the day, so that had a good day. And some high-flying stocks from yesterday came off a little in today's session. First Source has been flying all through the last month now. It's up 40%. Saw a bit of profit booking today, 5% lower. CAMS has also had a good run. Some tapering off in today's session. Kaplan Point was up 14% yesterday, ending 3.5% lower. NCC and CE Infosystems also seeing some bit of profit booking. And lastly, stocks that did well on the back of volumes today. All Cargo ending after a business update 9.5% higher. Vijaya Diagnostics had a good day. Web of Global Godfrey Phillips was up 11% yesterday, another 11% added today, and Poonawalla FinCorp 2 ending at the highest point of the day, 8% higher on very strong volumes.
All right, thanks very much for that. Always a comprehensive wrap out of things with Hormuz as far as the day's action is concerned. Jai Bala is with us of cashthechaos.com. Sudip Bandyopadhyay is also with us. Group Chairman is Inditrade Capital. Gentlemen, good afternoon. Good to have both of you here. Jai, for the Nifty, does a line of sight to the to previous highs open up? 25,078 was that number. Not very far, but what's your sense?
Yeah, the nearest resistance for Nifty is about 24,960, but the drop in August, it doesn't look complete. It makes sense if it were to drop one more time below the 23,800 level and then come back to the highs. It's not a requirement, but so far the price structure from the August high to the August low is looking corrective. Even for the global markets, it should have turned like a reversal signature, but it hasn't. So that's a positive surprise in the markets. So we might see heightened volatility, but it does look like the market's still not ready to go down.
Still not ready to go down. Something is unfinished, but I mean, yeah, it doesn't. I don't know. Would you put odds to it, to that view, that something needs to, it needs to finish before we start a fresh move higher, Jay?
Yeah, that'll be a very short-term move. As I know, the market will sport a right look if it were to go down one more time below 23,900, 23,800. Then that will, be a corrective look. But we just want to see the all-time highs taken out for the S&P 500 and the yen. Yen strengthening is a big story, and we have a lot of ground to cover for the yen. I'm anticipating something like 127 in the medium term. Medium term is about 6 to 9 months, and in the long term, I'm anticipating about 110 for the yen. So there's a lot of volatility in the short term and the medium term will come through. But if you wear a trader's hat, you're bound to make more money than if you wear an investor's hat.
Okay, all right. So the question is, you have to wear it right and wear it with the proper fit, right? If it's a trader hat you're wearing. Just stay on. We have some questions for you in terms of individual stocks and sectors as well. So let's put the spotlight on the oil and gas space, in specific oil marketing companies. A lot of these stocks were up and about on the back of bullish commentary coming in from brokerages. And of course, there was a tailwind of falling oil prices as well. Sonal is joining in with the details. Sonal, what are these notes saying?
Well, they're talking about reversal of the underperformance that we've seen in Q1 with respect to their fundamentals and stock price as well. Let's start with Citi, which has a buy rating on BPCL with a target price of 380. They say the three oil marketing companies, they have outperformed the broader markets by 17 to 37%. But most of this outperformance actually came in the first 2-3 months of this calendar year. And in last 6 months, there has been an underperformance for various reasons. We've seen GRMs falling. We've spoken about marketing margins going lower because of fuel price cuts. So this was the reason for the underperformance, but they think that going forward we could see a reversal reversal of this underperformance because fundamentals are turning in positive and in favor of these companies. They have opened a positive catalyst watch on BPCL and they continue to be very bullish on the stock. MK also has reiterated their positive stance on OMCs. They're comfortable with crude around that $80 per barrel mark because that would be positive both for their refining and their marketing segment. Quarter 2 FY25 till date earnings, they have seen an improvement on a quarter-on-quarter basis in both the segments, and that is something which is making them very bullish. They value OMCs at 6.5 times September 25 EV to EBITDA. And they also talk about how quarter 3 will be good, and especially after the state elections, the fear of fuel price cuts could go away. That would provide some support to marketing margins as well. They reiterate their buy on BPCL and HPCL. They have an ad rating on IOC. While they have retained their target prices on HPCL and IOC, they've raised BPCL's target price by 10% for 2 reasons. One, they have increased the multiple on the stock. And second, they think the investments of the value of investments for BPCL is highest amongst the 3. So that's why this target price increase.
All right, Sonal, thank you very much for that. So that's a nice look in as far as OMCs go. Sudip, any thoughts on this SPAC or the sort of entire oil and gas space? What do you like?
Well, Prashant, I think the trick is the oil prices. Global oil prices have been hovering around 80, and that does definitely help the Indian OMCs because they are both GRM as well as marketing margins remain acceptable levels with oil, global oil remaining around $80 per Brent. So that's, I think, it's doing the trick. Of course, BPCL out of the 3 has a better investment profile and the value of investments are significantly better. So BPCL is definitely at a slightly better position. But I'm a little skeptical because the state elections are approaching us and there may be some fuel price cut and things like that. So I'll be a little cautious. Fundamentally, there is absolutely no problem, but the timing may not be right considering the state elections are around the corner and there is always a fear of fuel price cut around these times.
Okay. All right. Got that. Well, stay on, Sudip. Some more questions in just a bit. Let's now focus on the shipbuilders SPAC because a lot of these stocks saw very sharp cuts today between 4%, 5%, going all the way up to a 9%, as we can see on a Mazagon Dock shipbuilder. So what's going on here? Let's go across to Hormaz. He's been looking at an ICICI Securities note, which is actually not sounding very bullish or very optimistic on these stocks. Hormaz, fill us in.
You know, it was around the same time, around a month and a half ago, we reported about how these shipbuilding stocks have shot through the roof and how valuations have surged as well. Since then, they've been on a slightly sticky wicket and today has been no different as well. Mazagon Dock, Cochin Shipyard, Garden Reach, all of them seeing losses of anywhere between 7.5%, 9% as well in today's session. And it was the 5th of July when we spoke about this first up, and that was the day when both Mazagon Dock and Garden Reach had topped out for the time being, and Cochin Shipyard topped just a day later, which was on Monday, on the 8th of July. And since then, Mazagon Dock is down nearly 30%, Cochin Shipyard is down nearly 30%, and Garden Reach, which at one point of time had almost doubled en route to a record high in just a month, is also down almost 40% from those levels. Now, until then, it was a question about whether these companies would deliver in the June quarter. They did so to a certain extent. Margin expansions were seen in Mazagon Dock and in Cochin Shipyard. Garden Reach, though, struggled a little on the margin front, but revenue growth was healthy. But to summarize, you see the kind of frenzy that they saw before this correction. Mazagon Dock at one point was up 90% year to date. Cochin Shipyard had tripled in value. And even the fact that Garden Reach was also up 2.5 times. So it shows the kind of frenzy that we had. But not everybody has been bullish here. ICICI Securities came out with a note last week, which was on the 16th. And they said on Mazagon Dock, they have a price target of 1160. The stock had made a high of close to 6,000. And even on Garden Reach, they have a price target of almost 515, where the high is around 3,000 rupees. They're saying that there will be execution issues that will bother Garden Reach when it comes to the order that it has received from Bangladesh because of the geopolitical issues. Same for Mazagon Dock. They say margins will remain elevated there, but it expects that those margins will taper off once the recent contracts get executed. So it's been a frenzied move in these shipbuilders. It's not a surprise considering the moves that you've seen. You'd see a 30-40% correction. Even on the valuation front now, they're still expensive even after the correction. Cochin Shipyard still at 45 times. The 5-year average is 14 times. Garden Reach at 30 times. The 5-year average is 17 times. So even then, it's not a surprise, right, that there has been some profit booking after the move that you've seen green. But for those who jumped in at higher levels, their ship has definitely hit rough seas for the time being.
All right, Hormuz, thank you very much. Rough seas indeed. Let's get some view in. And Sudip, your thoughts here. You heard the valuation picture, the run-up, the pullbacks. What from here, according to you?
Well, Prashant, I've been talking about this for a very long time. Every time I've been interacting with you guys, and this question comes, I've been saying that, I've been proven wrong every time, but the valuation was absolutely unacceptable. So look, somewhere we were equating order wins with, valuation bump up. That's absolutely absurd. And these are long-term projects. To build a ship, it takes years. So, the moment there's an order win, if you bump up the share price, I think it's crazy. So it was a recipe for a significant correction, and that's what is happening. I think it's a good thing to happen because, more and more gullible investors were getting dragged into this momentum. So yes, these are good companies. They have a strong order book. They have a great future, but not at the valuation at which they were quoting. Let valuation correct quite a bit. I'm not sure whether the report suggests 1100 and all that, whether 1100 is the right price or 2000 is the right price, but definitely not 5000. I'm talking about Mazagon Dock in this case. Similarly for all these stocks. So significant correction from here on also may be required for them to reach a level which is an acceptable valuation for recommending buy.
Okay, all right. Point taken. Their run-ups have been, 3x, 4x, 10x actually, 10x and beyond. So the pullbacks, of course, have been in the range of 25 to 35%. Now, wire and cable companies like Polycab, KEI Industries were all higher on the back of a positive brokerage note. UBS has initiated has initiated both these names with a buy rating, and they've got a very positive, constructive view on the sector as well. Upasana is here with a quick snapshot of what the view is. Upasana.
Well, that's correct. UBS has written a note on cables and wires segment. It has initiated a buy rating on KEI Industries with a target price of 6,150 and a buy rating on Polycab with a target price of 8,550 per share. It believes that the segment is poised to grow 2x the GDP growth in FY24 to FY30. And it expects that the current $8 billion segment is set to grow to $20 billion in FY30, and market share of the top 5 companies will certainly rise. It believes that the shifting in global supply chain will lift the export revenue from $2 billion in FY24 to as high as $5 billion in FY30. It also expects a revenue CAGR of 20% and EBITDA CAGR of 25% from FY24 to FY28 due to multiple triggers such as robust demand, operating leverage, growing market share, and robust export penetration of the companies. Now, coming to KEI Industries, the brokerage says that it is a consistent earnings compounder and only pure play on cables and wires. The company offers multiple triggers such as growth for cables and wires is set to sustain for a longer period of time, scope for market share gains in branded housing, wires and cables, and also export ramp up. Now, coming to Polycab, the brokerage says that it is a cyclical growth champion, beneficiary of a long-term electrification growth. It has a significant room to grow its total addressable revenue share, and FMEG consumer pull is the key for the company. It also expects better than expected domestic volume growth, market share gains, and also export ramp up are some of the key near-term triggers, is what the brokerage has highlighted. So all in all, we are seeing a positive note written by UBS on cables and wire companies.
All right. Well, thanks very much for that, Upasana. Before we take a quick break, we'll leave you with the market commentary that we received earlier in the day from Bernstein's Venugopal Gare.
The fundamental reality is that you're not really seeing any earnings growth acceleration. And more importantly, you're not even seeing earnings upgrades. The only difference is that we are still in a decent macro cycle. Earnings growth are decent, even if they are slower than what we actually saw in the previous 2 years. So what is essentially happening at this juncture is the broader macro strength, which I think is fairly visible for the next few years, is ensuring that the domestic flows sort of remains resilient. let's say 15 years back, previous cycle, which is perhaps the first mean cycle that we saw, and this sort of investment community was also smaller and perhaps just starting to understand how to professionally look at equity markets, used to be very embarrassed to put 20x Ps or 25x Ps on stocks. That's a fundamental reality. We have tried doing that during that phase in the peak of the cycle, and we used to get slammed, both by investors who used to actually question us on the rationale of a high P such as 20-25x. Now, the difference with this time is that people are a bit more liberal. I don't feel embarrassed putting 100x P rate on stocks. Nobody questions me. People feel happy about it. And the same is the situation 50, 70, 80x P. So now we don't really need to keep very high earnings for the next 2 years.
Welcome back. You're with us here on Markets Forward. Let's get you a quick sampling of some of the top corporate opinion that we got on the programs through the course of the day. Lemon Tree was a company we spoke with. Stock, remember, is an underperformer after its earnings. And the management told us that occupancy and average room rates should improve in the second quarter. Q1 was a bit of a disappointment. They've guided for a better second half overall. They've said occupancy at the Mumbai Aurika Hotel, which is a large property for them, will pick up in H2 and stabilize at about 70%, and it should be at between 80 and 85% by next winter.
All right. The second on our list is the innerwear maker Rupa. The company saw good growth in demand for athleisure, thermal as well as women's wear. The management has guided for an EBITDA margin in the range of 10 to 11% and over 20% growth in exports following the Bangladesh crisis. The management says that they are getting some inquiries from organized players already who were earlier operating in Bangladesh. That's not all. The HOEC management says that they're expecting 1,000 crore rupee capex will help increase their volumes to 15,000 barrels in 2027-2028 from the current levels, which is less than 3,000 barrels. The firm also expects its EBITDA to come in the range of 1,500 to 2,000 crore rupees by FY28.
All right, and before we wrap up, let's get you some of the key market events to watch out for as we come back tomorrow. Sonal is standing by with that list. Sonal, over to you.
Thank you for that. Well, we've been speaking about how earnings season is over, but not for some of them. So Procter & Gamble Health reports numbers tomorrow, and a lot of AGMs as well. It was a long list, so just have pointed out some important ones. There's Metropolis, Ramco Systems, Heritage Fruits, Wonderla, Fine Organics, to name a few, which have their AGM tomorrow. For Indus Towers, the share buyback closes on 21st August, so watch out for that one. There's a new IPO, Orient Technologies, which opens tomorrow. It's a 215 crore issue. The IPO will open on August 21st and will close on 23rd August. In terms of global data, a lot of economic data that we are looking at. For UK, it's the public sector finances, the economic statistical release that will be there. For US, we'll have the EIA crude oil and gasoline updates, which will be very important for the crude oil market.
All right, Sonal, thank you very much for that. So that's what you need to watch out for as we return tomorrow. With that, it's a wrap on this edition of Markets Forward. Thank you very much for staying with us. We are back with more news and updates on the other side. Stay tuned.